Hey, welcome back in the podcast. So today, if you are a investor, you're going to want to pay attention to this video because we're talking about landlord insurance secrets, how to protect your rental property in 2025. Brought in some special guests, Elena Boland, Wholesale Mortgage.
Hello.
How's it going?
Good.
It's January. How are things going over there? Good?
Yeah.
Hang in there. And then we have Nick Sanseri.
Hi.
How's it going?
Good, good.
Country Financial.
Yes.
Nick is our go-to person for insurance, and they also insure a lot of our own properties. So Nick's gracious enough to come in with Elena, and we're going to talk about the top ways that you can insure your property, make sure you're taken care of on that. Are you ready? Let's just hop right in. If you like our videos, please give it a thumbs up. Share this with anybody that has rental properties. And then at the end, we'll give all the contact information. So if you have any questions, you can reach the experts. So we're going to cover 4 different basic areas today. And the first one is landlord insurance basics. So Nick, the first question I have for you is, how does a rental policy, or I guess it's called a landlord policy versus a primary policy differ?
Well, there's a few things that are different. Most of the landlord policies are going to come with whatever we insure in the dwelling at. They typically don't have anything above and beyond. Like on an owner-occupied, you're going to have that extra 20% or the guaranteed coverage. On a landlord policy, we don't have that, so we typically will try to insure it for a little bit extra. You know, if the cost estimator comes in at $400,000. That's, and we insured at $400,000. That's all we're going to have coverage for. So we might want to kind of bump it up just in case, there's a little bit of error.
So it's not guaranteed replacement on the rentals.
No.
Okay, so that's a big difference, and that's something that a lot of people need to look into, especially if you own a rental for 10 years, right?
Right.
Because your property value's gone up 300%.
Yeah.
And you don't call Nick here and check on it. And then what happens?
It's
Underinsured.
you
Now,
run the possibility of
Do you call people and say, hey, we need to have an annual discussion about this property, or?
Typically, we try to do reviews once a year.
Okay, so if you haven't done that, the number one thing is get in and see your person, right?
Right.
All right, so that's anything else on that front?
There's, I guess, a couple other little things. Obviously, you're not going to have as much personal property covered, right? Because you don't need it. At a rental property, you're not going to have all your personal property there, so that's going to be a little bit less. But I guess for the most part, everything else pretty much.
Okay. Just make sure that you're looking every year and making sure that your property's uninsured on that, because it can be.
Right.
Most policies have guaranteed replacement if it's your primary. So, how do landlords insurance protect against property damage and liability claims? What's in there that does that?
So the liability, typically we would just like an owner-occupied. We're going to insure probably $500,000, or depending on, what the portfolio is of investment properties. Somebody that has a big, fairly large investment portfolio, we might want to put $1 million, or possibly an umbrella policy, to cover a little bit more from some sort of a loss like that.
Okay, and then do you guys insure an owner that has the property in LLC?
We do, yes.
Okay,
So LLCs, trusts, we can add those on as additional insureds.
Okay, great. So if you have, a lot of companies don't, some companies only do it, right? There are
I have seen some that didn't, for some reason, wouldn't insure that. Which I'm not exactly sure why they wouldn't, but
I think it becomes like a commercial policy. Or
yeah, they could maybe. Yeah, they're requiring to put them on a business policy.
yeah. So because it is a business at that point. Elena, so someone has a rental property. Is there any additional insurance requirements that you require as a lender?
Rent loss coverage is going to be a requirement for investment
What is that,
properties.
real quick?
It just helps the owner have coverage in the case of a long-term rent loss, so they can go to their agent and say, look, something happened, no tenants in there for X amount of months, and talk to them about what's covered there.
So how much that cost? That additional?
Well, that's going to come with the policy. It's
Okay.
something that's included with the policy. Yeah, and we can increase that if we need to.
Okay, so, okay, and then, so there's no other additional coverage besides that. All right, so now we're moving down to the next topic, which is coverage options for landlords. So obviously, there's a whole suite of different options you have as a landlord. What are the additional ones, just off the top, that are different? Put you on the spot.
I'm sorry, what was the question again?
Additional coverage options landlords should consider over above the standard policy. Should they?
Well, I would say, the liability is going to be a big one. So, they, especially like I said, if they have a bigger portfolio of investment properties, they may want to look at increasing that liability exposure.
And that's the next one down. Is how does an umbrella policy enhance a landlord's ability to protect? So talk about that.
So yeah, our umbrella policies are going to go above and beyond whatever we put on the home policy. So if let's say we just have $300,000 or $500,000 on the actual policy itself, umbrella policies start at $1 million and they go all the way up to $5 million. So gives you a whole lot more coverage for liability, helps protect from a lawsuit. So, and they're pretty inexpensive. So
A couple $100 a year.
depending on how many properties you have, I think the minimum for the umbrella is around $200 a year. But if you have multiple policies, I think it might be $50 or $60 per property.
Okay, so you actually put an umbrella on every property.
Right.
So you don't just buy one policy. If you're insured, whatever property you have insured, you're going to have an umbrella adjacent. And you're saying that if you have multiple, you get a little discount for additional umbrella policies and other rentals.
Right. It's pretty cheap to add additional properties onto this policy.
And that's, yeah, so that's one of the ways that, and we don't recommend this, we have a whole attorney that talks about LLCs. A lot of our clients, how they get around from owning an LLC, which is probably the preferred way to own a rental in my opinion, but you need to talk to an attorney, is they get $1 to $2 million to protect that asset. So that's what we see generally.
I want to touch on the LLC,
Yes.
please. You have to be very careful about how you transfer title to an LLC if you have a mortgage, because you can create a big issue for yourself where you essentially have to pay your loan back if you try to put your property into an LLC that is
right there.
anyone outside of the original mortgagee or owners on the property. So if the three of us decided to form an LLC and I already owned my investment property, and then I try to put our title to that property in our LLC, my note would be called due, meaning you have to pay it right then.
So I was just at lunch with a client who's getting a series LLC. There's a video above. We talked about this. Make sure you send a letter or get okay from your lender, because it wasn't a big deal when mortgage rates are at 3, but now you might have a mortgage at 3 and you are getting a 7.
Right.
The lender's going to be really excited to see you pay that back and get a 7. So just keep that in mind that you're more likely to be called now than you.
Agreed.
So, and it does cause it. So look into that and have a really good attorney look over that. We talked about loss rental income. Good. Elena's like out running her coverage here. And why is it important? Remind us. So loss income. Why have that?
So if you got, let's say, a fire, water damage, something like that, your tenants are no longer able to occupy the property if they've got to get a place to stay for a while. This is going to cover your loss of rents, because you may still have a mortgage that needs to be paid. So that coverage there is going to cover your loss of rent.
So, and it's pretty inexpensive, or is it standard?
There's a standard amount that comes with the policy, and I believe it's 20%.
Okay.
But I would say though, overall, I see a lot of insurance premiums come across because we have to include them for most people in their mortgage. It's not any more expensive than a primary residence.
Oh, so they for
as long as you're looking,
landlord policy.
Yeah, like if you're looking at parallel values, it's typically pretty close.
Okay, and then
sometimes a little bit cheaper even.
Yeah.
So, what about this is, and I know the answer, but it's kind of a trick question. How does landlord insurance cover personal property left at the rental premises? So, I want to be clear. I guess this question should be, does the landlord's policy cover your tenant's belongings if it burns down?
The tenant's belongings, no. The tenant is going to need to have their own policy for this, for that
What's
coverage.
that called? What's that?
It's just a tenant policy, or renters. I would call it a tenant policy.
Okay, and we're gonna cover that. So just keep in mind that if you're a landlord and the house burns down, the tenant needs to know it's in the lease usually, but they're not gonna be covered. They gotta cover their own stuff.
Right.
But I'm assuming that the policy will cover like flooring, appliances, stuff like that, or no?
The tenant policy, or
Or no, the landlord
the
policy.
landlord. Correct.
So like carpet, refrigerator, maybe not refrigerator because that's personal property, but appliances and all that.
Right.
Okay.
Well, the landlord policy is going to have, it can have a little bit of coverage for their personal property for those type of things.
Okay,
you know.
yeah, because sometimes we own the refrigerator in some of our rentals and the washer dryer.
Yeah, or maybe they're providing furnishing or something like that.
Okay.
Like,
All right, so that's additional coverages. Now we're going to talk about specialized coverage. So, what coverage is available for vandalism or burglary in a rental? You can't say that word, but in basically, your stuff gets stolen out of there for rental properties.
so yeah, again, that's going to be depending on what's stolen out of there. The landlord policy, you know, hopefully they have a little bit of coverage there for their own personal stuff. The tenants are going to have their own coverage for, you know, whatever belongs to them. But as far as damages to the home, that's going to be covered under the dwelling coverage on your landlord policy.
Okay. And then this one asks, how can a landlord insure against damage caused by tenants? Where does that fall?
Well, I
A little
would,
tougher.
yeah, that's where they should probably require their tenants to have a tenant policy if they, you know, for liability reasons like that.
And deposit.
Yeah. and
So
then-
deposit covers some of that. So that's a great point right there. Is we're going to talk about that later. But as a landlord, you should have in your policy. Got to check with your attorney, obviously. But all tenants should have, or be required to have, a certain amount of coverage for a tenant policy.
Yeah.
And what does that
liability
cost?
coverage, yeah.
Yeah, how much does it cost for like $20,000-$30,000 of personal coverage if you're a tenant, and $300,000 to $500,000 for liability?
They're very inexpensive. I mean, the policies are probably $15-$20 a month, but I mean, I'm sure they have an auto policy. So if they go to their auto insurance company and just throw in a renter's policy as well, there's typically a multi-policy discount that they would get. And so it's very, I mean, you're talking, maybe it adds $5 to $10 a month to their auto insurance policy to add this renter's insurance.
So it protects everyone, and then if they have some kind of liability there, right, their policy steps in first, and then how does it work? The landlord has their policy, the tenant, so if someone gets hurt, that's the tenant's friend. It would go to the tenant's policy first, then the landlord policy, or how's that all shake out?
Correct, yeah, I guess it would depend on who's at fault here, you know, who's negligent. Yeah.
But it's good to have both parties insured. That's what you're
Correct.
doing. And it's cheap,
Yeah,
right? It's very inexpensive. So
there's no reason to not have it, for sure.
Definitely recommend writing that into your lease to require your tenants to have that policy
Yeah.
in place.
And then how do you make sure that you are, as a landlord, are you an additional insurer, or what's the added as what? How do I make sure that I'm updated if they cancel the policy? What do I have to do as a landlord?
Yeah, you can be added as additional insured,
What does that
or maybe
mean?
you have a property management company that
Right.
does that, handles that for you. So that's just something that's added onto their renter's policy, and then the insurance company is required to notify the additional insured if the policy lapses or cancels.
So that's important because it comes up once a year, right?
Yeah.
A
Typically.
lot of tenants we know will have it for the first year there, and then they let it lapse. We don't know about it, so you got to be
Yeah.
notified.
Mhm.
Do you have to notify people? Do you
I don't personally. The company sends out a letter.
Okay. Is there any benefit? Do you get a discount if you're a landlord that owns a lot of properties? Is there or is it just kind of?
No, you know what? I mean, with Country Financial, our rental properties are already pretty inexpensive. So we don't. There is a multi-policy discount for on your owner occupied and your autos and all that, but the tenant policies don't typically have a additional multi-policy discount on them.
So, a question that just came to mind, and it had happened to one of our clients. You have a primary residence that you live there for 2 years or 1 year, and then you get married or something changes, you keep that as a rental and you move on to a new place. What should you do at that point from a perspective of insurance? You have to change the policy, right?
Definitely need to update that. That's gonna if you don't update that, it's gonna cause a nightmare for your if you have a claim. It's gonna it's. I mean, typically, if you have a good insurance company, they will probably work with you to get it paid, but it's going to cost extra paperwork, and it's just you're much better off just have it have it updated, make sure you're insured correctly, if it's owner occupied or a rental.
Yeah. So if you change the use of it, that'd be good. If you become non-owner occupied, change it, right? Call and get it changed. Now, another thing that comes up a lot, and I want to get your opinion on it, is we do rent backs. So what happens is some people can't move right away. Their house isn't ready, so we work something into the residential offering agreement that they rent the house back. So they actually become the tenants after we close. Boom, closes, the old owners become tenants. Should they? I guess my question to you is, should the new owner have a tenant policy in there? Or how does that work? Or should they have owner? How does it work? What kind of insurance should that person have during that rent back period?
Yes.
So the new owner's buying the house but hasn't moved in yet?
No, so new owner buys, closes, but previous owner says, hey, I need a rent back. So they're a tenant.
Right.
I'm a
In that
tenant now
property.
for 2 months, right?
For 2 months.
Mhm.
Well,
Should they change? Is there going to be two different policies? One, should the new buyer have a tenant's policy for 2 years? Or
it's going to depend on how long it's going to take them to move, because I think typically the policy gives them up to 30 days to move in.
Okay.
So they still have their owner occupied insured because they just moved in a new place, right? And they have an insurance policy on that place, and I believe it's 30 days they have to move their stuff in. So if it's going to be longer than that, then they'd probably want to get a renter's policy in place.
and then from a lender perspective, you can only rent back for how many days?
30.
Is it 30?
Mhm. Then it's an investment property.
And that changes your whole equation of
Yeah, we don't want that.
financing and all that,
Mhm.
mortgage fraud,
Right.
bad news. So,
Mhm.
but make sure. I think the best thing to do is probably contact your insurance agent if you're doing a rent back, and just be honest. Have
Right.
some correspondence so you make sure that you're. Anything else on that? Because they probably should have. If I'm doing the rent back and I'm representing the sellers, I always have them have tenant insurance just to cover with the whole liability. So if someone gets hurt, because things happen.
Yeah, it doesn't hurt to have that in place for sure. Yeah.
Okay. We're talking about renter's insurance. So just one quick summary about renter's insurance. Who's it for? What does it cover? And what are the 3 or 4 things that are standard in that policy? So you're a tenant. Your landlord comes to you and say, hey, you have to have renter's insurance. So they call you. What do you go over with them?
So it's going to cover their personal property, whatever they've got, $20,000, $30,000, $40,000, $50,000 of personal property. It's going to cover their liability, which is the coverage that protects you from being sued, or if they mess up something in the house that they're renting. Typically, that's it. It's going to cover a small amount of loss of use too. So if there was some sort of reason, some sort of claim going on at the house, and the person renting the house, tenant, is not able to stay there, they would have a little bit of coverage for them to get a place to rent for a while. Whether or not they're pretty minimal. I mean, that's why those policies are very cheap, because it covers those.
It doesn't cover someone's belongings in their car. The tenants, if they're out and they get their car smashed in and their computer gets stolen. Let's
Yeah.
say it's in the parking, or it's in the garage, not in the garage, but on the driveway.
It's the same thing, just like the homeowner's policy to cover the coverage for personal property is the same. It covers the personal property no matter where it's at. So it could be overseas, lose your luggage, that kind of thing. Could be in a storage unit, wherever the property's at, it's covered. So.
Okay, and it's a yearly thing, right? Or can you pay monthly?
You can do monthly, yeah, however you want to do it, quarterly, semi-annual. Annual.
Okay, and then I don't think there's too much else on here. I guess the one question that I have a lot of clients, they install video cameras and stuff like that. Are there any smart devices that a landlord can install to reduce their premium? Because we're always looking at premium reduction.
Those discounts are very minimal. There are discounts for stuff like that, an alarm system. The biggest thing I would say is to reduce the price is to take a higher deductible. If you can.
What are the deductibles that for a landlord policy?
Well, I mean, you can get them all the way down to $100. I don't typically see people doing a $100 deductible because it just raises the premium up. So most of them are around $1,000, but I usually recommend doing a $2,000 deductible because it's gonna lower the premium down a bit. So.
Okay, and then last question I have is under policy management. I thought was interesting, and you may not know this. It may be terminology different. It says, "What's the difference between being an interested party and an additional insurer on a policy?" Is there a difference, or is that just kind of the language?
I'm not sure what they're referring to, and it says interested party.
Interested party would be a lender.
Oh, okay. So, we would call that just like a mortgagee.
Yeah.
Additional insured.
That's your, because when I put it out, then I want to be on the notification list as that additional insured.
That would be additional insured. Yeah. If you're. Yeah.
Okay. What else? Any other things that you can add? It's a pretty broad topic. One of our biggest videos.
I don't know. Just like I said, make sure that you have enough coverage to rebuild the house in the event of a total loss. Because typically these policies don't come with any sort of extended coverage. So I think that's the bigger one there.
And then if you're out there, we're talking about rentals. Check out our video. I'll put it above. The difference between holding it in your personal name versus an LLC. And then make sure you're talking to your lender if you decide to change that, and make sure that if it's an LLC, you tell you're going to look that up though at the assessor, right?
Yeah, and most people that have an LLC, they're going to tell me, that. But yeah, that's definitely something that we want to know if it's in an LLC or a trust or whatever it might be.
Okay. Let's get the numbers out. So if you need help with mortgages on rental properties, Elena's the person to go to. What's your number?
775-825-1600.
And then Nick does automobile.
Auto, home, life, business insurance.
Oh, we have life insurance for them, yeah. So all of it, he does the whole suite. And our experience is that most of our clients end up going with him once they see his rates.
Great.
So what's your number?
775-823-3951.
And we encourage you, if you are a investor out there, send this to another investor. Share this information. If you have questions, send us a direct message or comment below. The other thing we're asking is if you have a particular video that you want us to cover, let us know in the comments below. Otherwise, heading into February and hopefully lower interest rates.
My crystal ball is broken.
Well, mine's not. Lower interest rates, let's go for it. It'll help us all out, and then get out there, and it might be a good time to buy a house, and because there's not a lot of competition, a lot of people are kind of sitting on the sidelines. So
Right.
hope for those lower rates. Otherwise, you guys take care, enjoy your week, and we'll talk to you soon. Thanks.